Li Auto might still be considered one of the underdogs in the EV world, but they might end up to be one of the big winners. So let's jump right into it. Li Auto has been performing exceptional throughout the last few quarters. It's one of the very few EV companies that are still reporting growth in their revenue and in their car sales. We can see that throughout the whole last year, they had really good increases in car sales. And the last time I made a video on Li Auto was about half a year ago, so right here. And I already predicted at that time that Li Auto might be the stock that you're waiting for. So that prediction has turned true a little bit. We see that since then we've got really strong increases, and we've doubled the cars sold from the Q3 all the way to the Q1. So we're now selling 52,000 cars per quarter. That's fantastic. Year over year, that is an increase of 66%. And a 66% increase in such a difficult EV environment that we are now. If we look into, Xiaopeng as example, they're crashing, right? They're not selling cars anymore. NIO is getting a little bit in troubles. We see also a lot of American producers. Lucid Motors are not performing well anymore. Rivian is struggling and so on. So there's a lot of difficulties in the market at the moment, but we see that Li Auto is still performing good, and that's just exceptional. But we're not just talking about car sales. We also see that revenues were actually increasing. They're having a revenue of $2.7 billion in the first quarter, and that has almost doubled. So 96% up from the same quarter of 2022. So absolutely fantastic. So that's a double in a year. Think about those growth rates, right? Astonishing. We can also see that their gross margins are still good at around 20%. And that's really important. Recently, we just talked about Xiaopeng. Check out the video if you haven't seen it. And we've talked about margins there. And we saw that margins for Xiaopeng just completely evaporated. They're working on, I think it was 1.4% gross margin. And of course, on the bottom line, they're just losing a lot of money. It looks different for Li Auto. We see 20% gross margins, absolutely great. But we also need to be fair, and we need to acknowledge that the margins have been coming down a bit. We had 22.6% in the same quarter last year. So we're losing 2-3% on gross margins compared to what we did last year. But we're still talking 20% gross margin. It's still a very good number for a car manufacturer. And of course, that pulls through then into the gross profit, right? So we are actually profitable, and not just on a gross profit basis, but later we'll also look into the net profit, and we're also on a net basis profitable. And that is just, extremely good. And that's, because they are obviously producing very nice cars. They're really focusing on China still. So they're producing a lot of cars on China. You can see their cars more and more on the streets in Shanghai, as example, in Beijing and so on. So pretty popular here in China. And that definitely, helps them with selling those cars. It's every car obviously that you see on the street is a little bit of marketing. Now, as I mentioned also, they are profitable on a net income basis. So we made $136 million in net profit. And that's really fantastic, because at the moment there are only a very few EV car manufacturers that are profitable. That's particularly, Tesla, obviously, they're doing a fantastic job, right? Very profitable company. BYD is profitable, right? And then there's Li Auto. And Li Auto is just not getting enough credit for actually what they're doing, right? They're doing really good. And I have to say also on my channel here, I haven't talked enough about Li Auto. I kind of also missed that one. And I think that there's a lot of work that we have to do to catch up on that. And this is just really fantastic, right? And I really enjoy to see what I'm seeing here. We see that their net income, right, has really increased drastically. We see that back in March of 2022, they were still unprofitable. They were losing 10 million renminbi, right? And then in the fourth quarter of 2022, they actually the first time we're profitable at 265 million renminbi. So that's roughly around 35 million US dollars, somewhere in that range. And then we see how fast that is growing, right? We see that we're jumping right up into 933 million renminbi, so around 140 million US dollars. And we see that's an increase quarter over quarter of 252%. Insane. So they made that difficult transition of becoming profitable with good margins. And we see it's exactly the same story that happened with Tesla. Once those EV companies make that transition, they're just, exploding, right? They're being so profitable, and that's absolutely fantastic. Additionally to that, and again, if you follow the channel here, you know that I love free cash flow investing. And we see again here with Li Auto, extremely good free cash flow. We see cash flow or free cash flow is just increasing every single quarter. It's literally, doubling again also here from last quarter to this quarter. Extremely good growth. We see 105% of free cash flow growth. So they've got their company set up, they got the factory set up. They don't have to invest that much money into the business anymore. And now the cash is coming back into the business. And that's, I'm repeating myself, but it's really, really good what I see here. Then looking forward into the future, they expect that growth to continue. We see that they expect for the second quarter of 2023, so the next quarter that they're going to report, deliveries of vehicles of 76 to 81,000 vehicles. Extremely good growth of 160, 70, 80% year over year. So they don't really see that there's a slowdown of demand of their cars, right? And it's the complete opposite of what we see of a lot of other EV companies. And that's why I'm turning more and more bullish on Li Auto. We also see that they expect 3.5 billion US dollars. So again, also here an increase of 172, like almost 200%, right? It's just in stark contrast to what everybody else sees. And that's a sign that the products that they're selling are good for the customers, and that the products are in high demand from the customers, right? And I want to be in businesses like that. So I'm going to look closer into, getting some shares maybe of this, just for my personal opinion, right? Do your own due diligence, research by yourself, look if this is something that you're interested in.